Hello everyone. Today in this video we are going to discuss about the internal orders, the configuration step and the business process and period and settlement related to internal orders. So the whole step-by-step process will be discussed in this video related to internal orders. So let us move on and see how the internal orders work in SAP. So the concepts we are going to cover in this video is we will understand the four categories of internal orders, create and maintain internal orders, understand the requirements for commitment management, distinguish between planning and budgeting of internal orders, use an overhead costing sheet to debit an internal order, understand the periodic settlement options. So just have these topics in mind. So we are going to cover the configuration related to these topics and also how we can use the business processes related to these topics related to internal orders. So the first thing we will understand the four categories of internal orders and how we create and maintain these internal orders and the requirements for commitment management. What are the requirements, and we will understand those requirements, and distinguishing between planning and budgeting of internal orders, and use an overhead costing sheet to debit an internal order, understand periodic settlement options. So in this video we will review the design and purpose of internal orders, one of the three cost objects in overhead management. Okay, this is one of the three cost objects in overhead management. So as a controlling consultant, you will need an understanding of the benefits of using internal orders as temporary cost objects. So cost center is used for capturing the costs which are happening throughout the year, but internal orders are used to capture the short-term projects costs and then settle those costs to the relevant cost objects. So SAP's intention with internal orders was to provide a convenient cost collector for short-term events or projects. If your company is sponsoring a company picnic, for example, how could you effectively collect those various expenses and divide up the cost based on attendance? Creating a cost center for an event like this would be impractical because an internal order is an ideal way to post all costs against a single cost object and through periodic settlement pass on each receiver's share of the event. As a CO consultant, we will need to explain the options available for the configuration of internal order type, which controls all order parameters from the order number to the period end settlement process. We may also need knowledge how to use overhead costing sheets, which are commonly used with internal orders. For period end processing, passing order costs to other cost objects is typically confusing to end users. Having a firm foundation in the configuration of a settlement profile will give you the tools necessary for explaining this process and completing our system design. So, understanding is important. So, just once again, we will see what are the topics we are going to cover in this video. So, we are going to cover how we configure the internal order types. We have seen that there are 4 internal orders. So configure order related profiles. We have seen planning profile, budget profile, and let us see how we are going to configure that. And period end closing activities. So we talked about the settlement, and let us see what are all the activities we perform at period end, and planning and budgeting commitments, daily business operations in internal order accounting. So let us see the master data. An internal order is a cost object in CO. Often you may hear this object referred to as a temporary cost object. The idea is to use these fairly simple cost objects for short-term events like that company, picnic, or even for small projects. Internal orders are not complicated and have far fewer dimensions than project systems. As the short-term event is taking place, costs are accumulated against the internal order master data in real time as the financial postings occur. At the end of the accounting period, or sometimes the end of the event, the internal order goes through a periodic process called settlement. During settlement, the costs collected on the order are assigned to a specific receiver object. Settlement is a form of cost or overhead allocation. So, at the end of the accounting period or sometimes the end of the event, the internal order goes to the periodic process called settlement. It can be done at the end of the accounting period or at end of the event. So during settlement, what will happen? The costs collected on the order are assigned to a specific receiver object. Settlement is a form of cost or overhead allocation. Four categories of internal order exists, defined by their usage. So there are 4 categories. So the 4 categories are overhead orders, investment orders, accrual orders, orders with revenue. So first the overhead orders. These orders are used to collect costs with settlement to other cost objects. So investment orders. These orders are used to collect costs with settlement to fixed assets. This category may be integrated with investment management and plant maintenance. Accrual orders. These orders are used in a unique design as an offsetting cost object for calculated or accrued values in CO. So these orders are used in a unique design as an offsetting cost object for calculated or accrued values in CO. It is an offsetting cost object for calculated or accrued values in CO. So orders with revenue. These orders can be integrated with sales and distribution are used only in CO to collect cost and revenue with settlement to any receiver. Orders with revenue. So these orders can be integrated with sales and distribution, are used only in CO to collect cost and revenue with settlement to any receiver. So to use internal orders, order management must be activated at the controlling area level as shown in the figure. So order management must be active. So internal order type. Now let us see the first category of internal order type. An internal order master record is created by first selecting an appropriate order type. All the control functions of the order type are then transferred to the internal order being created. So order types are created and maintained in customizing. Each order type represents certain control parameters that should align to a specific business process. So each order type represents certain control parameters that should align to a specific business process. For example, you could create an order type that allows settlement only to a fixed asset. This order type could then support assets under construction, or you could create an order type that allows settlement only to a cost center. This order type could then support overhead cost allocations. An internal order type is created at the SAP client level, which means that all the controlling areas of a client can use the same order types. So as shown in the figure, an order type contains the following important control functions. If we see here, this is the order type and order category is internal order, controlling, and number range. In the order type itself, there will be an number range and general parameters. So for this order type, what is the settlement profile and what is the planning profile and what is the budget profile, object class, and the model. Like this is like collective order without automatic goods. So this is general parameters. We will see each and every field in detail in our next slides. So control parameters means like control indicators. Here we can select commitment management or classification, revenue postings, integrated planning, co-partner update, active, and archiving, status management. So there are many profiles. You can see status profile, budget profile, planning profile, settlement profile, and status management, release immediately, and master data display, order, layout, print form, field selection. So this is totally about order types. So the first thing we see is number range interval. We can see these things here, the number range interval, settlement, planning profile, budget profile, and everything. So you are going to discuss about each and every field in the internal order type. So number range interval, this controls the number assigned to the internal order master record at creation This range can be external or an internal number range. So settlement profile, this controls settlement routine of the internal order. Planning profile, this controls how overall values are planned on the internal order. Budget profile, this controls order spending by using the availability control feature. Functional area, this value will default to all orders created from the order type. The model order, this function can be used to provide default field values when internal orders are created. For example, a default controlling area, company code, or profit center. Commitment management, if we select this order will be updated with commitments. Revenue postings, if selected, orders can collect revenue via the cost element category of a transaction. Integrated planning, so if we select this, orders will participate in integrated planning. Status profile, this function controls the life cycle of the internal order by determining which business transactions can be executed at which phase of the order. So a user status profile can be assigned in this field if more control than standard SAP field status is required. This function controls what does the status profile do? It controls the life cycle of the internal order by determining which business transactions can be executed at which phase of the order. Okay. A user status profile can be assigned in this field if more control than standard SAP field status is required. So release immediately. So once internal order is created, it will be released. Order layout, this function can be used to control this function. Order layout function can be used to control the presentation of internal order master record, for example by positioning groups of fields on the various tabs of the order. Field selection, this function can be used to set the status of the fields of the order master record. So the field status is used to identify fields that are hidden, displayed, required or optional HDRO, which determines priority in cases of conflict. Status management. As discussed before, the various profiles mentioned earlier are created independently of the order type and can be assigned to many order types. So we will review various profiles in later sections of this video, but for now let us briefly explore the status profile. Other profiles have a specific use in certain business processes, but the status profile is important for the entire order life cycle. Let us first look at the status management purely from a database management point of view. Eventually, master data objects and line item details in our system must be aged or archived simply to manage memory and storage resources. So in plain words, you could define an order life cycle in the following way. Create the master data, accumulate business transactions, mark the master data for aging, mark the line item details for archiving. In any ERP system, flags on objects and line items direct the system on how to manage the data. Yes. So this is how it is used. So that is the status management. Master data objects and line item details in our system must be aged or archived. So first we create the master data, accumulate business transactions, mark the master data for aging, mark the line items for archiving. So here we will see the kind of small tip. So what would order life cycle mean within the daily business? Let us look at an example of creating an internal order to capture expenses related to creating a new marketing brochure. This event has a beginning, a middle, and an end. When the order is created at the beginning, perhaps a good idea would be to prevent the actual cost posting to the order until a supervisor has approved the event. Then, once the brochures are complete and all costs are accumulated, preventing any other costs from posting to the order would be paramount. A user status profile can be created to manage these business transactions. All settings for the status profile are maintained in the customizing menu. First, let us discuss the indicators of SAP's standard example of order status referred to as system status. The first status will be release. If this status is set, all business transactions can post against the internal order. So here there is a warning. If release is not set, then no business transactions can be posted. TECO. This is a very important system status which we frequently see in our live projects. TECO, technically complete. If this status is set, limited business transactions can post against the internal order, but no changes can be made to the planned order values. If it is set as closed, only a few activities are allowed and no financial postings are allowed. Closed orders can be marked for deletion. So these are the three system status provided by SAP for the internal orders. So now moving on, we can see how the order type, status management group without status profile. So we can see the number 1 and 2. So for many companies, these three system status indicators are enough to activate system status. Simply leave the status profile field blank in the order type. So figure shows us an example of leaving the status profile field blank on an order type. To have the order status always set to released upon creation, you must also select the release immediately checkbox, which shows with the number 2. So if more control needed over the order life cycle, then an optional user status profile can be created and assigned to the order type as shown in the figure. So this is the user defined status profile. So let us see the user defined status profile which we assigned in the order type. So as shown in the figure, the user status profile and its rules allow you to define your own statuses by defining the following: user status and short text. So status profile, if we see in the previous screen, we have used it as number of zeros and 2. So if it is locked, indicator to set a status as the initial order status. So LKD is locked and PLIM is write plan line items. Lowest or highest status, which controls the subsequent status allowed. So here we can give what should be the initial status and which will be the lowest or highest status, which controls the subsequent status allowed. So, and if we see the locked status, so whenever the status is locked, this business transaction, we can set the options here, which business transactions are allowed or which business transaction should give the warning message and forbidden message, no actions. So as we see in the figure, each user status can be configured to allow or prohibit specific business transactions by setting the transaction control indicators. So here there is a tip: to prevent a business transaction from posting to an order, use the forbidden influence indicator in the user status profile. So internal order master record. So we have discussed about internal order type, status profile, and now moving on to the internal order master record. So let us see how we create the internal order. Now that we viewed the configuration settings for internal orders, let us begin the process of creating an internal order. Internal orders are considered both master data and a cost object and are created on demand whenever the business requirement exists. Internal order master records can be created in several ways: using the SAP GUI transaction KO, Y, KO04, using the SAP Fiori app manage internal orders. Using any of these methods, the first step is to enter a controlling area and use the drop down menu to select an order type as shown in the figure. Once selected, you cannot change the order type. That we need to keep in mind. So once we select the order type, that cannot be changed. So moving on to the detailed screen of entering values of internal master record. So in each method of order creation, you can also copy an existing order which is referred to with reference. In this case, under the reference heading, you would enter the controlling area and the number of the internal order master record from which you want to copy. So we have a special note here. Each internal order can be assigned to only one order type. So the figure, internal order general data and organizational assignments. So it shows some details from the internal order master record for the general data and organizational assignment data groups. So we can see the fields with asterisk are the required fields. So we can see in the general data the currency field is required, and in assignment data company code, object class is are the required fields. You will maintain the order at the controlling area level with reference to an order type which was created at the client level. So all internal orders are at controlling area level and order types are at client level. Key fields to fill out in the general data section are as follows. So we need to fill controlling area, identifies which controlling area the order is valid for. The order, the system will assign an order number from the number range assignment when the order is saved. Order type, the order type was specified at order creation and cannot be changed from this view. If incorrect, exit and begin a new. Currency identifies the currency to be used in regard to the order. This field is required. If left blank, the default company code currency will be used. But I don't think the system will allow because it is a mandatory field. For the assignment section, fill out the company code field. This identifies for which legal entity the order is valid. So the order is specifically under the controlling area and under that specifically to the company code. So a company code must be assigned to the controlling area entered in the general data of the order. You won't be able to select a company code here. Okay. The other fields in this group of master data can be used to make assignments. So the other fields in this group of master data can be used to make assignments of the order to business area, profit center and so on. If the order is a real as opposed to statistical cost object, the values entered on this order will be defaulted to the line item posted in each business transaction. So if the order is a real cost object, the values entered on this order will be defaulted to the line item posted in each business transaction. So now let us see the other screen from the internal order creation. So internal order, status, control, period and closing. We have just seen general data and assignments tabs. Now we see some details of internal order master record, status, control and period and closing data groups. So in the status, we can see the system status as created and user status without status number. We have seen that we are the user status and the control order category, the commitment update and in period and closing if anything is required like costing sheet, settlement cost element, settlements to one receiver, cost center, GL account, we can specify it here. So now let us take a closer look at each group. Status. In this data group, the settings from the status profile assigned to the order types are displayed. Once the order is saved, you may maintain the status manually in this group. So the settings from the status profile we assign in the order type. So in the control section, in this data group, we can indicate integration with cost centers, planning, and other components. So it contains the following. So integration with cost centers, planning, and other components. So it contains the order category. This value defaulted from the order type and cannot be maintained. Statistical order. If selected, this order will be posted to a statistical cost object. Let us see where is that field. Okay, this one, statistical order in the control tab. And actual posted cost center. If the statistical order box is selected, you can maintain the cost center to be posted to as a real cost object. Okay. So integrated planning. If selected, this order participates in integrated planning. Revenue postings. If we select this order can collect revenue via the cost element category of a transaction. And commitment update. If selected, this order will be updated with commitments. So here is a tip. For commitments to be active, the controlling area must have the commitment indicator selected. The order type can then provide a default selection to activate commitments. So period end closing. This data group is divided between the period end closing and settlement to one receiver data groups. The data entered in this data group determines the type of processing to be executed at period end and includes the following key fields. So period end closing. So it is like period end closing and settlement to one receiver data groups. The data entered in this data group determines the type of processing to be executed at the period end and includes the following key fields. So this is the screen, settlement cost element. So result analysis key. This field will control valuation at period end. This field will control valuation at period end. This is useful if the order contains revenue or if work in process is required for the order. Results analysis key. This field will control valuation at period end. This is useful if the order contains revenue or if work in process is required for the order. Costing sheet and overhead key. This field will control the overhead calculation for the order. Interest profile. This field will control the interest calculation. Settlement cost element. If there will be one and only one receiver of the order value during periodic settlement, then enter the cost element category 21 in this field. If there will be one and only one receiver of the order value during periodic settlement, then enter the cost element category 21 in this field. Cost center. If there will be one and only one cost center as receiver of the order value during periodic settlement, enter the cost center in this field. GL account. If there will be only one and only one general ledger account posted to during periodic settlement, enter the GL account in this field. So here we have a note. Settlement to one receiver is often referred to as basic settlement. We will review more detailed options for settlement or extended settlement in the period and close section. So finally, as shown in figure 4.10, additional data groups on the order master data include the following. So additional data groups like investment management. If the order is integrated with investment management, those parameters can be entered in this data group. So translation and long text, language translations if applicable will be located in this data group. Change documents. This data group is an order level change log. So we will be changing the status of internal orders or whatever changes related to master data will be updated here. So here we have one more tip. Remember that order layout of an order type determines what data groups and field statuses default from the order master record. So an internal order master record can be managed by creating order groups. Since the order number depends on the number range assigned in configuration, grouping similar orders together for reporting purposes can be helpful. Since the order number depends on the number range assigned in the config, grouping similar orders together for reporting purposes can be helpful. Groups can be created using two methods. Manually using transaction KOH1. If only a few orders need to be grouped together, you can enter each order number manually. Automatic collective processing using transaction KOK4. If many orders should be grouped together, you can create a rule to automatically include orders in a group if the orders share the same profit center, for example. In addition to collectively creating groups, transaction KOK4 contains these additional features. Change order status, apply substitution rule. So in this slide we have discussed that the order layout of an order type determines what data groups and field statuses default from the order master record. Okay, order layout which we assigned in an order type. So internal order master record can be managed by creating order groups. So now we move on to business transactions. Now that we have firm understanding of the order type and the order master record, let us focus on the business transactions whose values will accumulate on the internal order. If the GL account being posted to is integrated with CO, a real or non-statistical internal order can be entered on the line item of the posting to meet the FICO process integration or CO account assignment requirement. Before reviewing the basics of posting financial transactions to internal orders, let us look at the status of an order once again. So there are two figures which shows the status data group of an order master record. In this data group, the order status can be manually maintained. Remember that the status profile controls this activity. To see how the transaction control works, click Display Allowed Transactions as shown in the figure. A listing of business transactions that can be executed against this internal order is then displayed. So here we can see write plan line items. So this fields comes from the status profile which we assigned in the order type. Order status group as seen on the internal order master record, and allowed business transactions at the order level. So here we can click on allowed transactions. So we can see what are all the transactions are allowed for this status. This and all these two screens popped up based on our previous configurations. So posting integrated transactions. As financial transactions are being recorded throughout the organization, internal orders are updated in real time provided the order number was entered in the original FI document. So exactly where can the internal order be entered? The following are few common examples. On a purchase order line item, if the buyer enters an account assignment category F on the purchase order line item, then an order number is required to save the order. This order number will transfer to the goods receipt and logistics invoice verification, both of which create financial postings. Again, we have a note here. If commitments are active on the internal order, the undelivered purchase order item value will be visible at the order level. This occurs prior to the goods receipt. So what happens here is a post how integrated transactions works. So if there is on a purchase order line item, a line item which is related to the purchase order, if the buyer enters an account assignment category F, if that purchase order has category F, then an order number is required to save the order. This order number will transfer to the goods receipt and logistics invoice verification. And if commitments are active on the internal order, so if that commitments, the undelivered purchase order item value, so the undelivered purchase order item value will be visible at the order level. This occurs prior to the goods receipt. This occurs prior to the goods receipt. Even though the goods receipt is not done, the undelivered purchase order item value will be visible at the order level. On a customer invoice, if integrated with sales and distribution, the order number can default from the sales order line item. If not integrated, the order number can be manually entered in the FI accounts receivable invoice document. On a vendor invoice, if integrated with purchasing, the order number can default from the purchase order. If not integrated, the order number can be manually entered in the FI accounts payables invoice document. On a GL manual posting, the order number can be manually entered for any GL account number that is integrated with CO. The figure shows an example of the creation of an vendor invoice not integrated with purchasing. Notice the internal order number is entered in the order field for the GL account purchased services. Here we have a warning. The internal order number used here must be assigned to the same company code entered in the line item of the FI document. If not, the user will receive an error message. So we remember, while creating the internal order based on the controlling area, the company code automatically populated in the internal order master data. So we can use only the internal orders with the similar company codes while using the GL accounts. So we can see now the vendor invoice screen. Enter vendor invoice with the internal order number. In the line item, we can see at the bottom of the screen we have entered the order. When the FI document is posted, all relevant data from the internal order master record is transferred to the posting. So we can see the profit center and business area were defaulted from the order for the expense line of purchased services. So we can see in the screen even the profit center and business area is automatically populated from the master record. Okay, so in the screen we can see when the document is posted, the order information is updated in real time. So order, new product, brochure, GL account purchased services, and this is the GL account. This is the actual amount. There is no plan amount, so it shows under the difference. This is an internal orders plan or actual report. So now we just see about commitment management. Commitment management is an optional feature that allows visibility on an internal order into all open purchase requisitions and purchase orders provided the order number was entered in the purchasing document. Is an optional commitment management is an optional feature. It allows visibility on an internal order into all purchase requisitions and purchase orders. Provided the order number was entered in the purchasing document. Activation of this feature is created by indicator for the controlling area, indicator for the order type, indicator for the order master data. So here we have a tip. If you are managing a high value capital project using an internal order, visibility of open purchase commitments for the project could be quite useful. Open purchase commitments for the projects could be quite useful. So commitments, what are all the commitments related to that particular internal order? Okay. So there were no more details on this commitment management. They just said in brief about the commitment management. So period end close. As part of the period end close process, internal orders can be debited and credited by using various techniques. The following are a few examples. Cost center allocations can debit internal orders with expenses if the order is named as a receiver. Overhead costing sheets can debit internal orders with costs if the costing sheet is entered in the order master record. Internal orders can be the sender of costs via periodic repostings. Internal orders can be the sender of costs through the settlement process. As a tip, as we look at overhead costing, keeping in mind the different senders and receivers of overhead could be useful. Any real cost object can be a sender or receiver. Think of this scenario as a realignment of responsibility. An internal order was used as a temporary cost object, but at period end we could determine who is next responsible and transfer the cost to that receiver. So internal order can be a receiver and also can be a sender based on the configuration. So cost center allocations, through cost center allocations and overhead costing sheets we can debit the internal orders, and even internal orders can be the sender of costs via periodic repostings and through settlement process. So as we look at overhead costing, keeping in mind that different senders and receivers our overhead could be useful. Any real cost objects can be sender or receiver. Think of this scenario as a realignment of responsibility. An internal order was used as a temporary cost object, but at period end we could determine who is next responsible and transfer the cost to that receiver. So now let us see overhead costing sheet. This technique is commonly used to allocate costs in several CO components: cost center accounting, product costing and internal orders. Three main elements or steps determine the calculation of overhead costing. The calculation base is used to identify the amount to which overhead is applied. This amount is expressed by cost elements. The overhead amount indicates how much overhead to apply. This value can be expressed as a percentage or using a quantity based method, and you can also distinguish between actual, plan and even commitment amounts. The credit key indicates the sender, either a cost center or an internal order of an overhead. So with the credit key, you can also identify the secondary cost element category 41 for the posting to take place on when executed. Let us look at an example. As shown in the figure, a simple overhead costing sheet consists of two rows. Row 10 defines the calculation base. Row 20 defines the overhead amount as which is to be applied to the result of row 10. This row also defines the credit key as ZOO. So overhead costing sheet mainly used to allocate costs in several CO components: cost center accounting, product costing, and internal orders. So here we are discussing about how it is useful in internal orders. In addition to that, this overhead costing sheet is an important topic in controlling. This is a must known concept in controlling because it is used to allocate costs in internal orders, product costing, and cost center accounting. So now we see how the overhead costing sheet looks like, and we can see the two rows. First row is the base amount and second row is the overhead rate and what's the credit key assigned. And let us move on and see to better understand the calculation. Let us look at the details found on the costing sheet. By expanding row 10 as shown in the figure, we will see the range of cost elements defines the calculation base. So how these cost elements are used for calculation. So if there is any of these costs and cost elements are has values posted with internal order, so these cost elements will be in the range for overhead calculation. So whatever the amount will be taken as the base. And if we expand the row 20, we can see that the rate of 10% determines the overhead amount of YOO, and ZOO determine that the credit key of ZOO determines the cost element as 94 cost element and sender cost object as cost center 1010. Okay, so now let us see. We have even a tip for this. When creating an overhead amount key, you may use a dependency. In this example, the overhead type is the dependency. In this example, the overhead type is the dependency. We could assign a different percentage for plan, actual, and commitments, and other dependencies are available. So the tip here is When creating an overhead amount key, when creating an overhead amount key, you may use a dependency. So overhead type is the dependency in this example. So in order to calculate the overhead rate, the overhead rate is dependent on overhead type. Okay, we could assign a different percentage for plan, actual or commitments, and other dependencies are available. So we can add as many dependencies as required. How does SAP S/4HANA bring together these various components of a costing sheet? Let us look at a simple example. If overhead costing sheet of XYZO is assigned to an internal order master record, and the internal order has an actual posted value of $1,000 to cost element 6,000. Okay, then the overhead amount will be $100 because it is 10%, and the internal order will be debited $100, and cost center 10101601 will be credited all on cost element 94111000. So this is how it works. So first thing is we have assigned the costing sheet in the internal order master record. So this internal order has few postings and it has posted value of $1,000. So then the overhead amount will be $100 because it is taking 10%, and the internal order will be debited $100, and cost center with the cost element this will be credited all. Okay, and now the settlement. So the last step in the period and close process for internal order is referred to as settlement. During the accounting period, the temporary costs collector has accumulated costs through actual postings. So the last step in the period end close process for internal orders is referred to as settlement. During the accounting period, the temporary cost collector has accumulated costs through actual postings. At the period end, our task is to properly pass on to other cost objects their share of these costs. So we have a note saying that the settlement of internal orders is not mandatory. Two settlement procedures are available in SAP: the simple settlement and extended settlement. As discussed before, the simple settlement can be done with a single cost center or single cost element. Receiver information is entered on period end closing tab of the order, which is shown in the figure, like settlement to one receiver, settlement of cost element or cost center or GL account. In the order itself, And extended settlement is like we will use the settlement rule. Receiver information is entered in a settlement rule where you can enter distribution rules as shown in the figure 4.20. These distribution rules can be used to allocate cost to more than one receiver and are controlled by a settlement profile assigned to the order type. So these distribution can be used to allocate cost to more than one receiver and are controlled by a settlement profile assigned to the order type. Settlement profile assigned to the order type. So okay, we have assigned the settlement profile here. The settlement profile contains all control parameters for extended settlement and is entered in general parameter section of the order type in configuration. So a single settlement profile could be assigned to many order types. Now we can see the screen for settlement profile. So if we see the figure, it determines if an order can be settled, to be settled in full, can be settled not for settlement, assign additional structures if required, allocation structure, source structure, PA transfer structure, indicators, 100%, validation, percentage settlement, equivalence numbers, control that determines cost apportionment methods, determines the document type used in settlement posting, controls the number of distribution rules allowed, so even if you are using simple settlement, you must have a settlement profile assigned to order types. If no settlement profile exists, the order will not be included in the period and close settlement. So valid receivers, so settlement optional, cost center, order settlement optional, WBS element, material, network profitability segment, sales order, cost objects, order items, business process, real estate object. So if we see this settlement profile screen, whether it how it needs to be settled and different additional structures, and what is the percentage of settlement and valid receivers and other parameters. So there are also the following three different structure types. So allocation structure, Y1 assignment and controlling area. So allocation structure, an allocation structure determines which cost elements will be posted to at settlement and is entered in the settlement profile. An allocation structure determines which cost elements will be posted to at settlement and is entered in the settlement profile. An allocation structure allows you to choose by receiver type. An allocation structure allows you to choose by receiver type, either a secondary cost element or the original primary cost element, as follows. For settlement internal to CO, the secondary cost element used for order settlement must have cost element type category 21 in its definition. For settlement external to CO, the secondary cost element used for order settlement must have the cost element type category 22 in its definition. This approach is usually seen when settling an asset for a GL account. This figure shows an example of an allocation structure that allows the use of a secondary cost element if the receiver is a fixed asset or a cost center. However, if the receiver is another order, you will want to use the original cost element of the posted cost. So let us see in more detail. So allocation structure, we have seen it in our previous, this one Y1. So let us see this allocation structure. It has assignment of secondary costs and this controlling area. So this allocation structure determines which cost elements will be posted to at settlement and is entered in the settlement profile. This allows us to choose the receiver. Just now we have seen the allocation structure. In our previous scene we can see the PA transfer structure and the source structure. Let us now see what actually is that means. PA transfer structure, if you are settling to a costing based profitability analysis like profitability segment, a COPA transfer structure. So PA transfer structure is nothing but COPA transfer structure is required to map cost elements used to post settlement to value fields in COPA. You will enter this value into the settlement profile. So PA transfer structure, if we are settling to a costing based profitability analysis, that is profitability segment, a COPA transfer structure is required to map cost elements used to post settlement to value fields in COPA. You will enter this value into the settlement profile. Source structure, this structure allows you to group certain cost elements together for assignment to different receivers in the settlement rule. This structure can be assigned to the settlement profile or entered in the order master record. Source structure, this structure allows you to group certain cost elements together for assignment to different receivers in the settlement rules. This structure can be assigned to the settlement profile or entered in the order master record. So let us consider an example. Your order supports a training event. You have a requirement to settle internal personnel costs from the order to the human resources cost center. But any outside service cost should be settled to the training cost center. Use a source structure to group these different cost elements, then enter the distribution by receiver in the settlement rule. So the other structures like PA transfer is like, so it says like if we are settling to a costing based profitability segment, we use the COPA transfer structure. Planning and budgeting. Planning and budgeting are optional features that can be used with internal orders to monitor and control spending against an order. These features can be implemented alone or together. Planning provides values to compare to actual cost. Often, planning is referred to as funds requested. Budgeting provides a tighter control by preventing overspending. Often, budgeting is referred to as funds approved. To analyze plan actual or variance for an order, you may want to plan spending by cost element. Then, using the information system, plan versus actual can be analyzed. To control spending for an order, you may want to create an overall budget and availability control with actions that determine how far over budget the values may go. So, planning. Planning can be performed for costs, activities, and business processes that will be incurred over the life of the order. The levels of planning include overall planning. This option is simplest way to plan for an order. Values are planned at the order header level as overall or by year. Primary or secondary cost planning. This option is most commonly used scope when you have detail about expected spending by cost element. The analysis of plan versus actual is the most meaningful. Within this scope, two methods are available: manual planning, automatic planning. Manual planning, plan costs are entered manually into the planning layout by cost element, activity input, and revenue. Automatic planning, plan costs are calculated by use of an overhead rate, distribution, assessment, indirect activity allocation, process costs, and settlement. Unit costing. This feature allows for a lower level of planning detail than overall planning. Statistical key figures. Key figures such as head count or square footage can be planned for use in reporting and periodic reposting. A planning profile contains all planning parameters as shown in this figure. Planning profiles are assigned to the internal order types. So this is a planning general plan profile, time frame past, future, start, total values, annual values, primary cost element group, revenue cost element group, sender cost center group, sender account type group, costing variant, planning controlling area currency, costing variant PC02. This is a planning profile. Planning version indicators. Since planning is often an iterative process, you can use multiple planning versions to manage various plan assumptions. This method is the same version control referenced in previous videos, with version 0 always indicating actual values. Since planning is often an iterative process, you can use since planning is often an iterative process, you can use multiple planning versions to manage various plan assumptions. This method is the same version control referred in our planning version. Version 0 always indicates actual values. For planning purposes, two indicators in the version are important. So the integrated planning checkbox allows plan values to be passed on to profit center accounting and special purpose ledgers. The integrated planning with cost centers or business processes checkbox allows order planning to integrate with these components. Order planning is only used for long term orders or large values. In other cases, order planning for each internal order would be impractical. In SAP S4 HANA, internal order plan values should be entered using SAP BW and SAP Analysis for Microsoft Office. This plan data can then be retracted. So budgeting and availability control are features used to control the actual spending of an internal order. These features are popular when using orders to track capital expenditures and any other large dollar events with a finite amount of funds available. A budget profile must be created and assigned to the order type. All control parameters are found in this profile, including the activation type for availability control, as shown in this figure. Availability control provides a system response when posting to an order based on three actions. Action 1 is warning to user, action 2 is warning to user and email to budget manager, action 3 is error to user. So availability control, so how much funds are available will be maintained in this through this budget profile. Each of these actions can have a budget tolerance expressed as a percentage or an absolute variance. So notice that the tolerance is assigned to a budget profile at the controlling area level, and if we see, for example, if an order has a budget of $1,000 and a posting is attempted in the amount of $951, the system will trigger a warning message to the user upon posting as shown in figure. If the order has a budget of 1000 and posting is attempted in the amount of $1,151, the system will trigger an error message to the user upon posting as shown. If action 2 is in use, you must also configure a budget manager in customizing. During configuration, you can exempt specific business transactions and cost elements from the availability control feature. So availability control action 3 user error message, it gives an error message saying that exceeded by 151 you are. So these are the things which I have covered for internal order configuration, business process and settlement. So thank you so much for watching this video. Let us meet with in another video which explains the questions and answers related to internal orders with detailed explanation.
Thank you so much. Thank you so much for watching this video.